Historically, whenever gold started to outperform the S&P 500, that always led to massive crashes at natural gas. And as we are currently seeing exactly that happen, we're going to have a look at the most important technicals, fundamentals, and also macroeconomics of this commodity in today's video. Let's first have a look at the technicals and then continue with the fundamentals and macroeconomics of natural gas. We have recently seen that big crash from this top here in the end of January. We've seen that this lower band of this upwards channel has been retested recently, and we're currently seeing that volume delta is going to neutral levels again. We're also seeing that the RSI is starting to consolidate, and we're soon about to see a convergence here between the RSI moving average and the RSI itself. Here on the hourly chart, we are currently seeing quite interesting things as well. We do see that this lower band is retested, and we do have quite some support and resistance level here. Obviously, if we're able to retest this successfully, if we're able to reverse from here and actually start off with a new bullish trend here, we could actually see this form out for quite a while. However, we could also see a scenario where we just do retest this upper resistance, which ultimately leads to a bigger drawdown here at natural gas. But whether we're about to see this actually continue, this bullish trend here at natural gas, that is a question that we can only answer by taking a look at the fundamentals and macroeconomics. And so let's have a look at the supply and demand. We've actually assessed that data for quite a while now, and it hasn't really changed. We have seen a slight consumption surplus. We've seen that consumption has been higher here in 2025 than production has been here in 2025. We've seen a consumption of 4,268 billion cubic meters, and that coincided to smaller production with around 4,246 billion cubic meters. And that has changed now with the projection. We have seen that projection here for 2026 made by the International Energy Agency, and this would suggest we do see that production is actually higher. It is actually outperforming consumption, which in other words means we do have more supply than demand, and that would obviously be a bearish factor. Now, if you have a look at the storage, you do see that in the latest few days and the latest few weeks and months, we have actually seen that storage has obviously been drained as we're having winter time. We do see it has been going from 2,436 billion cubic feet to 2,214 billion cubic feet here, the US Energy Information Administration suggests. And so we have seen this actually decline. And that is obviously showing you this could be a bullish short-term indicator. We could see that prices react from that by a smaller bullish rally here. But to understand those longer term trends here at natural gas, to actually understand whether this long-term bullish trend is actually sustainable here in this rising channel here in blue, that is a question we have to take a look at by actually understanding the macroeconomics. And I like to start with having a look at the global liquidity cycle. This is the cycle where you do see credit actually expanding and contracting. And in our eyes at Kronos, we do believe that is exactly what we're seeing here on the weekly. If you have a look at the natural gas chart, you always see those cycles. And if you'd like to learn more about them, please make sure to subscribe to our channel and like the video, because those are the underlying drivers of natural gas. Whenever you do see that expand, that is actually having a bullish influence on natural gas. You can see that here back in 2023, when this photo was taken here, you can see that this was actually at the bottom and coincided roughly to the bottom here at natural gas. And you can see that history really is moving in those cycles, and we're currently at this top of this cycle. And that would obviously suggest we might see liquidity going downward again, as we've seen it happen several times here. And you do see that we're also seeing a quite interesting correlation here with the gold to S&P 500 ratio, as we've explained in the intro. Whenever you do see that ratio actually rise, that tends to signal that we do have underlying weaknesses, as gold as a risk of metal is obviously outperforming this risk on equity market. The S&P 500 seems to underperform in those instances. And we've seen that happen before previous crashes, and basically those always signaled those crashes. For example, the 2008 great financial crisis has been actually signaled by exactly that indicator. And all of those other downturns here marked by those orange bubbles have been actually signaled by this indicator. But we do also have some other indicators for you in today's video, which is, for example, the copper to gold ratio, which is quite similar. We do also have the gold to oil ratio here in purple, and obviously also the DXY. And those are quite interesting indicators as well. We have talked about them earlier. You do see that divergence here between copper to gold ratio and the natural gas price chart. And when this is actually diverging, in other words, when you do see that natural gas is moving upwards and the copper to gold ratio is moving downwards, that is also suggesting we might see a downturn, as we do see that divergence, because natural gas seems to not be able to rally for long if you do see copper actually being weaker than gold or strengthening less than gold. And that historically always marked those big downturns that we've seen here. And the same thing goes for the gold to oil ratio. Whenever gold is outperforming oil, also that seems to coincide quite often to those times of economic distress, because obviously oil is needed for industrial productivity, and gold is needed for economic crises, and obviously gold seems to outperform oil as this industrial commodity in those times of economic distress. And when you have a look at the dollar, it all comes clear, and it probably suggests that we might see history repeat, as we are currently seeing quite similar things happening again. Whenever you do see those bubbles forming out, you tend to see the DXY, or the dollar index, actually drop. You see this being fueled by those loose monetary policies. And in fact, you do also tend to see that coincide to interest rate cuts. Those late stages of the liquidity cycle are often actually indicated by those liquidity cuts. And we are currently seeing exactly the same thing as we've also seen previous to the great financial crisis. And whenever this is about to reverse, whenever we do see that the DXY is strengthening again, and historically that has actually occurred quite often on this trend line here in blue, then we do see that liquidity conditions are actually reversing. We do see that the global liquidity cycle topped out, and we do see that history is once again repeating itself. If you like this analysis of natural gas, please make sure to subscribe to our channel and like the video. Don't hesitate to ask questions in the comments, and also please give us your opinion on this natural gas chart that we've today assessed. And also make sure to join our Discord server, which is also linked down below. Thanks for your support. See you the next time. Bye bye.